Um, Good morning, good afternoon, and good evening to all that have joined us today. We're cognizant of the fact that you could be joining us from across the globe. Hence this salutation about good morning, good evening, and good afternoon. I would like to welcome you all to this session in the Agribusiness Deal Room. It's a session on a series of knowledge sessions that discuss topical issues that affect investment and agribusiness transformation on the continent. As we start this session, I just wanted to go through a number of housekeeping issues. The first one being that please note that you're being recorded, and by participating in this session, you are acknowledging your willingness to be recorded. You are all invited to a question and answer session at the end or towards the end of the presentation. And there is a function within the GoToWebinar software where you can type in your questions, and these will be read out appropriately. We have some measures in place to maintain the integrity of the call, but should we have any disturbances or we lose connectivity, please bear with us. We shall shortly try to restore the session as quickly as possible. So with this very quick introduction, I just would like to introduce our speakers very quickly and also the session in general. So today, this morning or this afternoon or this evening, we have 4 distinguished speakers experienced in their own professional world and have been working on the continent in various roles. The first person I'd like to introduce to you is Rose Gossinger, the Managing Director of Pula Advisors. And Pula Advisors is an organization that seeks to innovate financial solutions across smallholder terrain in Africa, from insurance to blended finance, and to provide the wheels for financing smallholder and protecting their investment small farmers. We're also supposed to have Dr. Moses Ikiara, the Managing Director for Kenya Investment Authority. He's been in that position since 2013. Kenya Investment Authority is primarily responsible for the policy advocacy, attracting of both domestic and international investments into the country, and also acting as a go-between investors and those who seek investments. We also have Felistas Obonyo, who is the Business Development Manager for East Africa for Syngenta. Syngenta is an organization that has been working across the globe, particularly in East Africa. I think they work to provide solutions for farmers in terms of yield and crop protection, among others. We also have Keval Bid, the local representative and senior investment officer for FMO. FMO is an entrepreneur development bank that invests across the globe. In Africa, particularly, they're investing in agribusiness, financial service solutions, and a number of other entrepreneurial areas. So as I mentioned earlier on, this session is about, if I just go back and read exactly what it says on the title, a resilient and sustainable agriculture economy, investment opportunities or risk management as a challenge. Now, we have all seen that with the advent of COVID-19, the issue of resilience has actually been brought to bear, and big questions are being asked as to whether our systems are really resilient or not. We've seen how a number of private sector investments, agriculture itself, have been affected in terms of supply chains, in terms of productivity, etc., because of the issues that we constantly face as a shock to the agriculture sector. This session, therefore, is here to discuss some of those challenges, to look at the barriers that exist for investments in agribusiness, and also to look for opportunities that we can unlock out of the innovation and the challenges that we face. So we brought together this distinguished panel, as I mentioned, to discuss these issues. And just to start the ball rolling, I want to call upon Felicitas to start the session by looking at some of the challenges that are faced by Africa agribusiness farmers in preparing and responding to shocks and stresses. So Felicitas, over to you. Felicitas, can you hear me? Okay, I can't seem to hear you. Felicitas? Okay, whilst Felicitas is struggling a little bit with the audio, maybe I can just quickly go and ask.
Thank you so much. I think there was an issue with I was muted by the organizer. Apologies for that. As mentioned by Hassan, my name is Obonyo Felicitas and I lead the business development team. And I work with Syngenta. Syngenta is one of the world's leading companies with operation across 90 countries, and we are dedicated to bringing plant potential to life through working with farmers, and we are able to offer them solutions to challenges that they face through integrated seed care, crop protection, as well as other value chain. We work closely in partnership with like-minded organizations, and through partnership, we are able to achieve our objective by ensuring that we are serving our growers and offering them solutions that can be able to help them improve their yield at the farm level. When you look at the current scenario where majority of businesses have really struggled due to the COVID that has impacted the globe, and one of the challenges that businesses as well as growers face is lack of labor to perform agricultural work in the farm. There's a lot of difficulty that growers have faced during harvest and also during sowing and transplanting. But this has opened the door for mechanization, for example. Apart from it being a challenge, there's an opportunity that we can actually leverage and focus on mechanization as an approach in the agricultural sector, with transformation changes where pieces of machinery can be used in the feasible areas, having larger hectares of land to conduct agricultural activity, such as sowing of seeds to the harvesting of the crops. Secondly, there is lack of availability of products. People have felt now the importance of local available food in the village level and residential area. And instead of struggling to search for improvised products, individuals are now more interested in consuming local food as they are more nutritious. So it has also brought an opportunity in the sense that people are consuming more and supporting our growers, though the availability of those products are also not enough or sufficient, particularly in the urban areas. When you look at the technology front, ICT plays a critical role in ensuring that our growers and our businesses are flourishing. Majority of our growers have not adopted to technology as much as we would like them to have adopted as at now. Though the progress has been good so far, particularly in countries like Kenya, Tanzania is also coming up, as well as Uganda and Rwanda. However, few initiatives for processing for the produce for growers can use or leverage the ICT tools to be able to actually ensure that they are able to reach the consumer, people who consume the products that they're actually selling to them. So there's an opportunity for ICT partners to be able to leverage with growers as well as businesses so that they can be able to help them to develop platforms which will enable them to be able to sell their produce or to sell their goods and services to their potential customer with much more ease. So apart from a lack of information, communication and technology, there's an opportunity to work with these growers and businesses to support them so that they can be able to really adopt this new technology. Overall, lack of information has been one of the major challenges across farmers as well as businesses. Lack of information cuts across ICT, availability of products, labor, etc. So if we can be able to leverage our ICT platforms and be able to offer solutions and be able to offer information about solutions to our growers and businesses, they'll be able to understand the importance of these solutions and how it can help them to solve the day-to-day challenges that they are facing, so that they can be able to improve in terms of efficiency at the business level or at the farm level. And also it can help them to improve in terms of productivity and increase on the profitability at the farm level as well as at the business level. Over to you, Hassan.
Thank you very much, Felicitas, for that. Very elaborate and very clear about some challenges farmers face and every business faces the work as a result of the shocks and stresses that they face. And also hearing from you about the opportunities that are available. A bit of reading around the opportunities and what that entails for business and private sector. The numbers are pretty staggering. And one report suggests that the investing in resilient technologies is a business that has a turnover of close to $4.5 billion annually. And just to put that into context, the economy of Kenya in terms of GDP is about 99 billion a year. Africa was 358 billion a year. Zambia is about 23 billion a year. Uganda about 33 billion a year. Now, just investing in resilient technology, 4.5 trillion a year. So that's quite a lot of money that's there, and we can actually capitalize as countries to invest in resilient technology. That being the case, I'd like to bring in Dr. Moses Ikiara to talk us through some of the policies and structures that governments are putting in to attract such investment from such a huge cake that's available. Dr. Ikiara.
Thank you very much, Hassan. I hope everybody can hear me, because I didn't catch you most of your intervention, but I heard the first as well. I hope everyone can hear me. Yes, so my name is Moses Ikiara. I head Kenya Investment Authority, or KenInvest, and our business, we are a state corporation that is mandated to promote Kenya to private investors across all sectors. And we also keep a database of investment opportunities in all sectors of our country, and also in different parts or counties of our country. And thanks for the chance to discuss this topic. I think COVID has more than really emphasized the importance of agriculture. Importance of agriculture is so critical because people have seen when things get very tough, it's down to food and maybe medicine. So I think those people who didn't have who needed a reminder to invest more in agriculture. I think it has come through this COVID, and therefore resilience and sustainable agriculture, of course, then becomes very important because you know the challenges we are facing. We have challenges on both demand and supply side, and I want to start with challenges before I go to policies. Challenges like inadequate and seasonality of demand. Sometimes people are able to produce, are not able to find good markets. Sometimes markets are there, they are not able to find the products that is out there. We lose our country about 40% of food, which is harvest produced due to post-harvest, poor post-harvest management. We have also poor and low quality supply of of produce due to segmented and broken down value chains, vulnerability to risks and the catastrophes, and then inadequate policies and the support systems. Let me start on the importance of good and effectively implemented policies. I note this, I will say good and properly implemented, because sometimes the challenge is not actually so much lack of policies, but poor timing of implementation, incomplete implementation, or lack of implementation completely. Then, of course, insufficient budget allocation is very important, and collaboration with different levels of governance, development partners, and the private sectors. We have in our country a number of projects that have worked very well. And whenever you find in government working very well with development partners and in governmental sector and the private sector, we see the result. But usually this is not as frequent as we like. So coming to policies now, on the demand side, because we have to look at attacking the problem from both the demand side and the supply side. On the demand side, we need targeted support to create and maintain a price premium for sustainable agricultural products, because ultimately for everybody, human beings and farmers are rational agents. They react to good returns. And so I think if the market can give a premium, then you can be sure that there will be incentive to innovate and to continue producing. The second one is strengthening regional integration, whether it's at East Africa Community, COMESA, then we forming up also the Continental Free Trade area. Those are very, very good movements, and we need to make sure that at least the integration is not just there by name, but in terms of market access and the free movement of inputs and the produce is smooth. And also establishment of exchange arrangements where, commercial exchanges, where if one country has more food and the other doesn't have, then you can be able to see movement across. On the demand side also, we need a very strong campaign programs to address information gaps. I think, for instance, as mentioned this, and I think we need to do more. On the supply side, we need a very deliberate, resilient, and sustainable agriculture strategies. Kenya has the Kenya Climate Smart Agriculture Strategy of 2017, and I think we need more countries to have deliberate strategies that are looking at resilience and looking at sustainability. Then we need, of course, enough support for R&D, research and development, to produce, varieties like we've seen maize varieties like Katumani and other kind of varieties that are able to resist disease, and they're able to resist also, water stress. But you can't do it without doing research, and so we need sufficient funding for that, and also extension services, together with strengthening farmer cooperatives, and also giving farmer training. All those are very, very crucial, so that the technologies can be developed and they can be communicated to the farmers, so they know how to use it properly. The other one is strengthening regional value chains. What you've seen with many investors, when they come to a country, in any of our countries in Africa, is too small for them. They can't get enough raw material to run their factories. Until we are able to do now regional value chains, where we can be able to aggregate raw materials and to make the investment in processing viable, then it cannot work. So we have to have here, this where we need the political leaders to forge, rather than compete with the neighboring countries, is to form win-win arrangements, so that the regional value chains are actually working properly, not one country stopping food being exported to the other one and things like that. This will help scaling up and really make the attractive private investment. We also need dedicated credit. Almost there.
Dr. Kiara, we'll come back to you on some of the specifics. I think you have given us quite a general overview in terms of what governments should be able to do to attract investment within agriculture and make it more resilient.
Yes.
But a number of things come to my mind in terms of what would be of interest to our audience, particularly some of the practical issues that, for example, the Kenyan government has done in specific areas such as irrigation or seed systems development, etc. But we'll come back to you on that in the next round of questions when we ask for specific examples. I'd like to move right now very quickly to Keval. Keval, I have a question for you around what type of partnerships we can build to have successful businesses grow and increasing investments within the area of resilience. Like I mentioned earlier on, I had an opportunity to look at your investment portfolio across Africa. I noticed that you have done quite a bit of work in a number of sectors, but there's very little investment within the agribusiness sector. I think there's one or two that I saw in South Africa and Kenya, but not too much for us to look at specific examples. Probably you could tell us some of the challenges as to, why is it that there's little investment within the agribusiness sector, particularly in innovations that will see us build a resilient agriculture economy. And where you have done so, what are those successful partnerships? What do they look like? Over to you, Keval.
Thanks, Hassan. So as FMO, I think, so just for a quick introduction, we're a Dutch development financial institution, primarily owned by the government of Netherlands. So your question around agri-investments in Africa for FMO, it was only about 3 years ago or 4 years ago that FMO decided that we're going to have a specific segment looking at agriculture.
Hello, we seem to have lost Keval.
So we see that as a very important area where the global, at a global level, where more investment. Hello. So a lot of the investments you see are very recent, purely because we're only about 3 to 4 years young in terms of the agribusiness that we have as a focus area. So as FMO, the way we look at it in terms of partnerships is we look at it, look, if you want to go fast, you go alone. But if you want to go far, you go together. And that's why the way we look at resilience and sustainable partnership is very important. I think what's important is to understand what resilience means. And that's how, as FMO, we focus our investments. So our key themes as FMO, especially within agri, are climate change, rising inequalities, and also food and nutrition and zero hunger for all. So when you look at climate change, we're quite keen on post-harvest reduction kind of investments, smart agricultural kind of investments, which use less water or improve harvesting techniques or planting techniques to avoid soil degradation. Rising inequality, so we're looking at import substitution. How can we help the local markets improve on the value chain additions? On zero hunger and food nutrition, how do we have local production for local consumption? So these are the investment areas that we're quite keen on, we quite like to invest in. And the way we look at it is, if you're able to address these issues under the resilience side of it, I think then you have a sustainable business. A sustainable business has a longer term, better impact. And the way we like to do it is 2 ways, really. Partnerships through 2 ways. One is a client partnership, the second is external partnerships. So when I talk about client partnerships, I think it's very important for us as FMO that every investment we do, before we make that decision, we actually have in-house environmental, social, and governance officers who actually visit the site. So it's not just bankers or finance people like myself who get on the ground and look at the project. So we have very specialized environmental, social, and governance officers who go down to the site. They look at how the plant will operate. They look at how the workers will be treated. They look at what's the effluent treatment like. They look at how the water usage will be like. They look at what's the impact on communities around as well. So that's the level of involvement we get into. We also then draw up a plan around where we see the gaps. We then sit down with the client to also say, if you're willing to address these issues, we will be able to offer you grants up to a certain level to address some of these issues, to make sure the business is a lot more sustainable. And to make sure that this comes to life, we do use external parties. The external partnerships that I also mentioned, there are multiple fronts. one is government. We work with local government. We also work with our Dutch embassies on the ground. We also work with NGOs and civil society partners as well. So people like WWF, SNV, IDH, Solidaridad. These are people we actively use to help us to understand what the issues on the ground would be. And then we also use knowledge institutions, universities for research purposes to help our clients to improve their business models, and also organizations like food and agricultural organizations. So just to give you kind of an example of how we kind of bring it home is we have some recent examples in Ethiopia where we made some investments where our environmental and social officers were on the ground to speak to multiple communities around the area to look at what the impact for them would be from a water point of view, from an affluent point of view, and then also from a jobs point of view. So it wasn't engagement with the communities itself, but it was also engagement with the chiefs of the area. We also go as far as in the contracting we do with our clients. We also place conditions to make sure that the businesses are more resilient, they're more sustainable, and we have milestones that we keep on checking on again and again. And we use external parties to actually help us to oversee this implementation. So I think partnerships are very critical in all our investments that we do.
Thank you very much, Keval. That was pretty clear in terms of some of the processes and rigor that you go into to build partnerships for success in the agribusiness sector. We do appreciate that it's a young area for you in terms of when you started investing. There are still some questions that are lingering, at least in my head, as to why such an area with such potential still attracts very little investment. An example is in the area of irrigation, which has proven to be quite a good model to build resilience within agriculture. The potential for irrigation on the continent is huge, and yet the investment is still. So the opportunities are there, and we're still trying to understand as to why this investment is still not coming to the agribusiness sector. But perhaps I'll come back to you with that a little later. I'd like to move on to Rose Goslinger at the moment, just to talk about some of the innovations that she and her company have been going into in addressing agriculture shocks and stresses. Particularly in mind that, when we think about things like drought that can have the potential to wipe out at least half of the productivity of production in agriculture in Africa. What kind of innovations does your company, do you have to bring out investment opportunities to secure resilience of farmers on the continent? So over to you, Rose.
Okay. Thanks for this opportunity. So I run a company called Pula, and I always joke that we like kind of being under the radar, but at this point, we develop agriculture insurance services across about 12 countries in Africa, everywhere from Senegal to Madagascar. And effectively what we're doing is, filling the gap between what insurance companies, there are in most of the countries we're working in, there are 30+ insurance companies. And what we do is really make sure that, the risks that exist in agriculture, such as drought, locusts, pests, disease, hurricanes, etc., that they can be covered and understood by these insurance companies. And so really, our business at the core is about partnerships, because, we partner together with insurance companies on one side. We're not an insurance company. We're what people call an insurtech these days. And on the other end, what we do is, is we really bring together, clients for insurance products. So you would think about those initially generally as farmers, but what we've seen is most successful in this case is to really work with kind of aggregators, whether they're governments having like fertilizer subsidy programs or banks providing loans to farmers. And if you think about that in a bit more detail, what it means is that, we get a really kind of an inside look of organizations that are really investing in agriculture. When I looked at the questions for this webinar, what I asked myself is like, look, you ask about who is investing in agriculture, and we just, like to use kind of a famous phrase in any kind of Hollywood mob movie, we follow the money. If there is investment in agriculture, we will know about it, because if you're investing in agriculture, at some point you'll be like, oh, wait, what if it doesn't rain? What if locusts eat all my crops? And that's really where we come in. So we develop partnerships and insurance products for organizations that look to invest in the areas affected by climate change. And so we see it from an inside track. We see who is investing, we see how much they're investing, because then they ask us, can you insure this investment? And then we'll put together, the risk profile, the agricultural, the actuarial work. We'll put together the claims assessment processes to get that risk to be insurable so that people can make that investment. To give you a couple of examples of what we've seen happening and investments that we've seen happening both on the public and the private sector side. For example, like a transaction we just closed in Nigeria, we worked with the government of Nigeria, where the government of Nigeria was investing something like $300 million worth of inputs into the agricultural sector. And they asked us, can you develop an insurance product for something like 600,000 farmers? And so we had to come up with a product that really kind of insured a whole wide range of risks, from floods to droughts to pest and disease. And similar, we see that in Zambia, the government, the Farm Input Support Program, is really doing something very similar. They're looking not necessarily to loan now to farmers, but they're looking to give farm inputs to farmers on a subsidy level. But they want that subsidy not to be a one-off, they want it to be a long-term sustainable subsidy. And so they say, okay, let's make sure that it's insured. And we see that that's kind of a trend across from governments. There's an increased investment, like, and very much in line with the Malabo Declaration, to put more investment into agriculture. But now there's kind of also a trend to make sure that investment is insured. And we see that, we see that now in Nigeria, we see it in Zambia, we see the Kenyan government doing that. We see a whole range of governments kind of going in that direction. On the other side, I find it interesting when people say, like investment into agriculture from the private sector, why do people not necessarily invest in that? And I just, you just look at the risk and you see you see all the different types of risks that farmers face. We work together with a Safaricom in Kenya, a mobile operator, which has a very innovative program called DigiFarm, where they lend to farmers across a whole bunch of different value chains, from sunflower to maize. And we've dealt with floods that affect those farmers, as well as post-harvest losses. You think that you have all your crops in, and then it rains all the way through your harvest season, and you still lose 30% of your harvest, and which effectively reduces your profit margin again. We see that, the mobile operators like Safaricom are kind of pushing the boundaries here, but a lot of the innovation that comes here also comes from kind of the fintech, which is kind of the financial, the credit angle of, equivalent of what we do in the insurance space. So we see social enterprises like One Acre Farm that really have pushed the boundary here and have really, come up with a very interesting integrated model. Even if it's not for profit, they really kind of push and have been able to really scale and reach out with financial services to, I'd say, over 1 million farmers at this point. We see kind of newer entries there, like people like Apollo Agriculture, which works in Kenya, which also provides, using kind of, more satellite input, provides loans to farmers. And we really think that, those kind of private players into this market are part of an overall picture where you see both private sector and public sector go into this market, but in the long term also it needs looking at the sustainability, and therefore looks at, solutions such as insurance to improve the climate resilience of farmers in this case.
Thank you very much, Rose. That's pretty clear. It seems like it's a really diverse kind of playing field, and it requires quite a lot of innovation as well. One thing I know is that in the journey of building resilience, you do need to have more than one solution for agribusiness, for farmers, because no one solution is going to help them, is going to solve the problem of resilience in this sector. At this point, let me just remind our listeners that we do have a question and answer facility. And if you do have a question, please feel free to post it in the question section. If you look on the control panel for the webinar facility, there's a place for you to place your questions. Please feel free to place questions, comments to the panelists who are speaking currently. But as the participants are doing that, I just want to come back to Felicitas very quickly. Maybe just listening in from what the other participants, that their panelists have spoken about. Just ask you, maybe from a business perspective, maybe just two things that you see as critical challenges that you have faced in business development for Syngenta in terms of investing in the smallholder farming space. What are those two critical challenges that you, as a person who does business development for Syngenta, has faced in East Africa?
One of the critical challenges that I've seen, and which I'm still working on to see how to support our growers to be able to improve, is on financing. We work across Africa with partners to be able to offer the full potential of the green revolution by removing some of the barriers like financial barriers that our growers and businesses are actually facing. And we've partnered with different organizations in order to offer them this particular solution. And one of the partners that we work with are the commercial banks as well as the fintechs, whom we are working together in order to support our growers to access financial services. And we are offering these services through a program which we refer as Mavuno Zaidi, where we have 3 objectives of training growers on accessing information, agronomic information, access to financial services such as insurance, which it has been mentioned by Rose, financing, so that they can be able to get a bundle of inputs which will enable them to be able to get better yield, as well as offering them market, some form of market, either through structured market program or through the brokers that we work with at the local market, to ensure that they can be able to have a place to sell their produce at the end of the season. So finance is one of the major challenges that even internally as an organization you may find yourself facing in order to scale. As you are all aware, the cost to serve per farmer is very high. Therefore, there's need for partnership, working with like-minded partners in order to offer them, in order to be able to de-risk some of these, in order to de-risk some of this cost and be able to make it much more easy for organizations to work with. Second is the issue of market on its own. Majority of the crops in Africa, we actually lack a good market structure that we can be able to work with and be able to ensure that we are helping or enabling our growers to scale. Majority of the growers in Africa are small scale growers, and therefore they lack structured markets where they can be able to sell their produce and be able to be guaranteed that if I'm able to increase productivity from 1 acre to 2 acres or 3 acreage, I'll be able to get some good of market. So I think to Moses, there's still need for the government to work on the market structure to make it much more better and much more holistic so that it can be able to accommodate the small growers, and also to work on the pricing structure so that it's not open to the market, so that farmers can be guaranteed at least a bottom price, which will guarantee them some form of profit at the end of the season. So from my side, finance and market are some of the key challenges that our growers are facing.
Thank you, Felicitas. I mean, and thank you very much for bringing in Moses kind of automatically, because I was going to bring in Doc, and I'll just ask him, simply put, when you look at the complexities that are there in the agriculture sector, investing in agriculture is not as easy as putting up a bridge or something, because there are various sectors that intersect with the agriculture sector. And just in terms of policy or government promotion in investments in agriculture, particularly in the face of climate change and COVID, can you cite maybe an example or two where you have attracted any type of investments that you think will build the resilience of the farming sector in Kenya?
Thank you, Hassan. I think the investor interest in the agriculture sector is quite very, very strong. In fact, I see sometimes the problem is that some of the people are looking at a scale that they are not easily able to get, either maybe in terms of size of land that is big enough for what they want to do, and they don't want to go into the challenge of trying to coordinate and manage small farmers, because the transactions cost is a bit of a challenge. But coming to specific examples, we have seen companies that want to come and produce things like large scale production in agriculture, like in the development of blueberries and very, very innovative things. there are actually a couple of the projects or tangible projects I could share with you, but I didn't bring them here. But I think they are there. Interest is there. For me, what I see being a major issue, and I think this follows up from what Felistas is saying, is that we have to go back to basics and just focus on the matter of value chain. Because if you find that somebody who comes to the market, but then they are not able to get sufficient organization of farmers and sufficient land to produce at the scale they are looking for. Others are producing and they are not able to get the actual market. So I think everything we need to do, it's not as simple either policy or anything. It's a good, effective collaboration between governments who are responsible for policy, private sector who are doing the production, and you have other agencies that are like non-governmental, the financials, the insurance agencies, in a nicely coordinated way. And then in terms of policy, you are able to link up actually with the moment you negotiate a market, and you can lock it in through bilateral agreements. Then it is very easy to work downwards to organize the producers to do this. So for me, I think the critical thing is the interest is there. People are waiting and knocking on the doors, but they need, there are those things that are lacking, the coordination of the value chain. And I think this is one of the areas ourselves we are focusing on, to bring all the players together to make sure that every value chain is properly coordinated. You start with the market and work down.
Thank you very much, Moses. I actually have a question here from one of the participants who is asking particularly around the issue of insurance. So this question is going to you, Rose, and it's about aquaculture. The question really reads that, looking at the complexities within the aquaculture sector, particularly financing, are there any insurance products that are available for the aquaculture sector? So over to you, Rose.
I think with any risk that we take on, particularly in new sectors, I would say every day we'll get a new sector coming to us saying, look, could you also insure this particular risk? This morning I got a request in from a coffee trading organization in Uganda. You'll ask me about aquaculture. I think the question we ask ourselves in this space is because, we're effectively working with in a blank area where there's not a lot of existing products available. So we start with the basics. What are the risks that we're looking to cover in aquaculture? And we have a conversation with the clients around that. One of my commercial managers refers to us as cooks or chefs. So, we work in an area where, there's not yet a recipe, but we're going to cook you a recipe to tailor your needs. And then we'll do it in a way that we can actually also then replicate it across a number of markets, because we find that, maize farmers in northern Nigeria have similar issues as maize farmers in northern Ghana. It's the same agroecology, it cuts across a number of different markets. In the end, we work on a premise of, across all these different markets, there may be country boundaries and local regulations and fertilizer subsidies or no subsidies that can make, things a bit more complex, but in the end, it comes down to farmer realities. So if you look at those farmer realities, from there, you develop a product to fit those needs, and you'll have some tweaks and changes per market, but in the end, those risks stay the same. If you're looking at aquaculture, we always ask the question, the customer the question, what is the risk that you most need to cover? What you're going to pay us money for an insurance product? What is the risk that you're most concerned of covering? And don't just think about this year's risk. What are the last 5 years of risk? This year everybody asks us about locust coverage. The year before that, everything was about full armyworm. The year before that, everything was about, maize leaf necrotic disease. Risks change. And so we really spend quite a bit of time with the customer base looking at what are the risks that you want to cover. I think it also, to some extent, it also comes about, who is the customer that's asking for a risk to be covered? If it's aquaculture, is it, are these the particular organizations that are doing, the farmers groups that are doing the aquaculture, or is it, let's say, for example, it could be an organization like FMO that is looking to finance an aquaculture project? They have very different needs than, than an actual producers association. So we see that, for every type of client that comes in, you'll find a different type of insurance that needs to be developed for that. So the question is,
a follow-up question, Rose. A follow-up question that's come up, maybe just should a very quick answer around what are your processes for onboarding and what are your processes for payouts? A couple of questions coming through to you on insurance. So, yeah.
Okay. So we've tried selling to individual farmers directly, and we found that was really tough. I started in I've been working on agriculture insurance for the last 12 years at this point. And, when I started, I was actually working for Felicitas organization for Syngenta. And we tried selling insurance directly, and it was too expensive. So we really, if you want to onboard on insurance through us, you'll come through an aggregator. We'll work with a producers association that will insure all of their farmers at once because they're taking out a loan from, or they're looking for a financier, and that financier says, I need this insurance, and that financier will be our client. And that's the way that they're onboarded. So we don't do individual onboarding. We basically work through aggregators and partnerships. Then when it comes to compensation, we really try to work out a smart and efficient ways of compensation. So, traditional ag insurance always relied on individual farm visits. You visit the farm at the start of the season, halfway, and again at the end. That works if you have a large-scale farm, but if you're a small-scale farm in the middle of rural Africa, the maths of those visits simply don't add up. Our average insurance premium from a farmer would be somewhere between $2 and $6. So you really can't make the cost of individual visits work. Instead, we rely on technology, data, and statistics. So for example, we have a small army of field enumerators who go out to the field and harvest with farmers. You don't need to visit every farmer. Think of it as when you go to the polls when there's an election, there'll be like polls in advance. Those polls are representative surveys of what will happen later on when the actual election happens. We do the exact same thing. So we will effectively do a poll or a survey of a particular area that was insured, harvest with those farmers in the field, and we use technology and data to drive where those people will go. So we'll know through satellite data, what an ecology looks like and how we need to sample in that ecology. Our people are equipped with tablets, digital weighing scales, so that all the information that is sent to us is transparent and can be seen by all the different parties, whether it's the aggregator that is insuring, the financier that is insuring, or the insurer that's taking on the insurance risk. And so they can then expect to be paid out through the organization that they insure through. So again, through the aggregator. So sometimes the farmer will get cash, but more often he'll get like debt forgiveness or something like that.
Fantastic. Thank you very much. I'd like to pose a question here to Keval, particularly on the investment portfolio. There's one question coming out from the audience, and it's around the SME capacity. That for us to build resilience, we also need to build resilience of the business side of agriculture. Within your programs, do you have any capacity building programs, or is it purely just an investment kind of idea? Do you provide support to build capacity of SMEs? You also invest. Kevin.
Yeah, so I think it's kind of in line with what I mentioned earlier. So in every investment we carry out, we actually like to look at capacity development or some kind of technical assistance. So the environmental, social, and governance kind of due diligence that we carry out before we make any investment, that's very important, because that will actually highlight to us which are the areas within that business that needs some kind of capacity development. So capacity development, is that from, do they need better qualified people to manage certain projects? Do they need to address if soil post-harvest loss is the issue? Do we need to kind of get some consultants to help them with that aspects to improve the productivity and ultimately improve the business? So those things are very much down our line. So one thing though is that as FMO, I mean, we try and look for projects at scale, so where we can have a higher impact. But we do recognize that SMEs are the backbone of most of the economies in emerging markets, including Africa. So there are different ways we go about it. So if we're not doing direct investments, there are a number of investments already within Africa, which you don't really see directly under our agri investments on our website, is through banks or microfinance organizations or specific funds, which are actually directed towards agri investments. And what we do is we actually take risk off the microfinance organization or financial institutions so that they can capitalize their lending towards smallholder farmer businesses. And then we then look at or work with some of the financial institutions or intermediaries to then look at which SME support portfolio are they looking to support? Is it tea? Is it dairy? So that we can then improve, we can carry out capacity development at the intermediary level, specifically for certain sectors. So we then try and map out where is the help needed, and then we try and work with either the client themselves or through the intermediaries to build capacity development programs. And that goes hand in hand with any investment we make, whether it's debt or equity.
Fantastic. Thank you very much, Keval, for that. We have about 10 minutes before we go. So we should be getting towards our concluding remarks. But before we do that, there is another question here for Ruth. Is Pula stationed in Uganda? And if yes, can farmers contact you directly, and how can they contact you directly? So back to you.
So thank you for that. So we have it's a fairly it's one of our smaller operations. Like we currently run operations in 11 countries in Africa, from 3 of our core markets. Those are Zambia, Kenya, and Nigeria. So we serve the Ugandan market from our Kenyan operation. I wouldn't say that we ask, as mentioned before, it's been like not very economically efficient just yet for individual farmers to contact us. So we really work through organizations. So in Uganda, I know that we've partnered together with a couple of insurance companies, but also with kind of like smaller fintechs called like Umulisa. We're talking to a number of different traders, such as, I'm trying to get them, I think it's called Mukwano Industries. So we work with kind of up and down the value chain with financiers, as well as like the off-takers on one side for actually pulling in the.
Great. I hope this question has been answered adequately from our participant from Uganda. So more or less, Pula works with intermediary organizations, insurance companies, and they work at that level. Maybe I can just move quickly to Felistas around their operations. I know you spoke about some of the challenges, and this is an opportunity for me to ask some of the technology really focused on in terms of drought resilience or economic resilience. What kind of package does Syngenta offer farmers and the farming community in terms of building resilience on a long-term basis?
Okay, thank you so much. And from Syngenta perspective, we offer growers a wide range of products. We have our integrated seed system, and we also offer hybrid varieties to our growers, which ensures that our growers are getting better yield. And also we offer crop protection to ensure that our growers are able to take care of their crops very well, so that they can be able to get the yield that we've promised them to get. When you look at in terms of resilience, climate change is one of the major challenges that we are facing in Africa and across the world. And I really like the work that Rose is doing in order to offer new innovation to our growers in different value chains. And I'm glad you're working on a package-based product based on the need of the customers or the value or the specific value chain. And also offering agronomic insights in terms of agronomic insight, which can really help our growers to be able to really improve and get better yield. Some of the work that we are doing through Mavuno Zaidi is actually to enable our growers to access innovation through good agronomic practices, as well as through things like precision farming and agronomic techniques, which can really help to improve carbon in the soil. So we work very closely in partnership with other organizations so that we can be able to reach our growers, to be able to access this information. We have our good growth plan, and we pledge to really support our growers, our smallholders to really improve and to use our products very well. So we are really impacting a lot of knowledge to our grower through training, as well as leveraging technology, different technology systems, so that we can be able to reach out to them. When you look at innovation, also in terms of our products, we are offering a wide range of products to the growers, and we have a team over in who are really working day and night to ensure that they come up with new technology that can be able to combat some of the challenges that the growers are facing on the ground. Through our Mavuno Zaidi program, which means higher yield for those who do not understand Swahili, it actually has impacted over 60,000 growers across Kenya, and the plan is to scale across other countries as well, so that we can be able to ensure that we are supporting our growers to improve. Partnering with organizations that are working on the financial sector, partnering with the team that is working on the market sector, I think we can really be able to push a lot and be able to help our growers to be able to get better yield, improve on their practices, and be able to make profit from agriculture.
Thank you very much, Felisa. Like I mentioned, we're now reaching the end of our discussion, and just want to ask the panelists for a 1-minute parting shot in terms of how they can promote resilience in agriculture, or investments in resilience in agriculture. So I'll move over to Keval, and particularly latching on to the issues that have been discussed, and also looking at some of the key priorities that you have. What is your parting shot in terms of increasing investments within the area of resilience in agriculture? Keval, in 1 minute, please.
Thanks. Yeah, I think it's important for any investments coming in. I think they need to think about inclusive development. Without inclusive development, I think your business will have a very short lifespan. I think it's very important the way you look at the safety aspects of your workers. You look at how do you improve the soil that you're working with? How do you ensure that you work with the right level of water? Don't just draw water out of a river. You need to think about the communities who may be using it downstream. So I think you need to have a very inclusive development in your projects. Do use partners to help you to come up with plans on how to make your business more sustainable. And I think ultimately that's what the business will be more bankable, both from a debt point of view or equity point of view. Because I think the world we live in are a lot more increasingly sensitive towards these issues. And I think it's going to only get a lot more heightened going forward. So it's important to think of inclusive development and not just a silo as a project.
Thank you, Keval. Dr. Moses Sikera, your 1-minute parting shot. Maybe also try and focus on the issue of energy and how that relates to agriculture. And is there any investment opportunities around energy in agriculture? And what are those key issues that you think governments should do to attract investment in agriculture around like renewable energy?
Sorry, who is that question?
Moses, can you hear me?
Oh no, I lost you for like big part of a minute. Okay,
so just a 1-minute parting shot from you.
Okay.
We focus on renewable energy. The role of government in attracting renewable energy into resilience in agriculture.
Sorry, I didn't get. Did you say renewable energy or just a parting shot on whatever we have discussed?
A parting shot, but can you try and focus it on renewable energy? There is a question from one of the participants.
Okay. So thanks a lot. So on the parting shot is that I think we really need deliberate strategies on resilient agriculture. And at the center of those strategies must be securing markets, coordinating value chains to make sure they are well coordinated, helping the investors with the transaction cost of organizing producers and the related issues, and then having a multi-sector approach to implementation, because implementation is a key challenge. And finally, effective cooperation and collaboration with other players, from research and everywhere, and also incentivizing agri-tech and also giving them support so that they can be able to innovate. On renewable energy, I think what I can say is that, a country like ours, renewable energy is growing very, very fast. Some of the forms like solar energy are still not yet properly able to get into the national grid. So and I think there are a lot of policies that support renewable energy. So anybody like farmers who want to do off-grid solutions on renewable energy, this is recommended because I think you don't have to spend a lot of time trying to get power purchase agreements. So it's good to do off-grid solutions. You get quick approvals, and technologies are also, I mean, very well supported in terms of fiscal tax policies. Thank you very much.
Thank you. Thank you very much. Rose, let me come to you for your 1 minute parting shot. There is a question here in terms of what do farmers do? Since farmers seem to be a bit lost, where do they go for your product? And what's your take on the whole issue of innovations in resilience?
You know, I think particularly when it comes to climate change, this has been a really tough topic for the world to grapple with. And I think if you're looking at it from the smallholder farmer level, you know, smallholder farmers have been also a really tough, you know, market for private sector to address. And, you know, I think the overwhelming, you know, like paradigm that's coming out of this, you know, I've worked together with organizations like AGRA, Syngenta, you know, different banks, you know, it does come back to like organized farmer groups. And this is not something that is new to the sector. This is not something that is new to Africa or like the world overall. Like if you look at any developed market, you start having farmers, once farmers are organized in farmer groups, they have access to information, they have access to services like the insurance services that we do. We tried offering this product, you know, commercially to individual farmers, and I respect that people want to buy our product directly. Like that's a huge compliment to our business. However, you know, I run a business. I do not run a charity. We had, you know, a couple of $1 million in turnover last year. We have probably just under $5 million in turnover this year. It's a profit-making enterprise. If I wanted to run a charity, I would tell you, come to my shop, I will give this product to you, but we're not running a charity. Like, so I would really encourage as farmers who want to access our products to organize themselves. Because that is how you in the long term can organize, you know, access services. And it's not just insurance. So that's my parting shot.
Thank you very much. I think that's a really, really wise saying that you brought out. The more we organize, the better we are able to access these services and investment. We have come to the end of the webinar at the moment, run out of time. Felicitas, I'll take your products as your parting shot in terms of what it is to offer farmers in terms of resilience technologies. But I'd like to thank all the panelists today for their valuable inputs and suggestions, and also the way you've pointed these discussions towards increasing resilience in increasing investment in resilience. So I'd like to thank all of you and wish that you have a pleasant participation in the rest of the AGRF. At this moment, just thank you also to the listeners. Thank you for being part of this session.
Thank you. Thank you to AGRA for also organizing this. We appreciate.
Yeah. Thank you. Bye.